Good afternoon, everyone, and welcome. I'm John Shapiro, manager at Loan Depot. I've got Floralba Lopez, one of our senior loan officers. I've got Nate Servideo, one of our senior loan officers, and a renovation specialist with Loan Depot. Today we're going to talk about various programs that we have, and the first one we're going to start out with is our renovation loans. Nate, take it from here.
So what is a renovation loan? With the limited inventory out there right now currently in the market, a lot of our clients for the realtors cannot find the house they want. So the idea with the renovation loan is to renovate it into the house of your dreams. We just need to use one existing wall. It's one closing, and you get you in your dream home.
The beauty is, in today's tight market right now, people don't have to go into a house that's already fixed up and their dream home. They just need to find a home, and then we could assist them with their vision, make it their dream home.
So when you're choosing your financing options, there's 3 loan options. We can take care of short sales. We can buy in certain areas. We can gain more square footage for you with an addition, open up a lot of new avenues for you, and we'll go through all the details of the loan, what it can handle next. Renovation loan benefits. It's one loan, so instead of doing a purchase and do a line of equity for your repairs, we can do all this in one loan. There's no need to pull more equity out of the house or run up credit card debts. We can create the home of your dreams with one loan. Go ahead, John.
So there are 3 different options when it comes to what type of loan products are available. You have FHA, which we all know has a 203K program, and inside that program it allows you for a limited option and a standard option. Then we have what's called Fannie Mae Homestyle, which is just the conventional version of the 203K, and then finally we have a VA, which is similar to the FHA, standard and limited option, so people could purchase those homes, renovate them under any of those 3 options. The features for the FHA 203K is, the beauty is you can put down as little as 3.5%, like a normal FHA loan, after the repair value. So the properties are just eligible for a 1 to 4 unit primary residence, which is the normal requirement for FHA. The minimum credit score on this program is a 620. And again, this encompasses a purchase or a refinance, whatever the client needs for the scope of their work and for the property that they have.
Some of the items you can do on the 203K standard loan, you can replace all of your roofs, you can repair a pool, you can do all of your plumbing, electrical upgrades, energy upgrades. The only item you cannot do is you cannot insert a pool. You can't put a pool in. Nothing of luxury can be put into the house, but you can repair all of the house items that are needed.
So what is a standard FHA loan? There are 2 loans broken down in FHA, a limited and standard. Standard allows the scope of work to be much higher than a limited. Limited restricts you to $35,000 of work. But if you go standard, you could do 100, 150,000, it does not matter. It's whatever the value of that property is after you repair it. And these are just some of the items. The hot items today for people is the modernization of a home. Everyone wants to take a home that might be 30, 40, 50 years old, modernize it. New kitchen, new flooring, new bathrooms. And then some people, which is a big ticket item today, are hurricane windows and solar. Solar, first off, is because they get a tax credit when doing solar, and secondly, it lowers their bills and their costs after in that home. So we're able to help them with that as well.
The limited program is more for $35,000 minor repairs. So you're probably not going to redo all your hurricane windows or a new roof. Maybe you're going to upgrade a couple bathrooms, upgrade your kitchen. You're not probably doing your addition. You could do an addition with the 203K standard. With the limited, you're doing less than $35,000 of total repairs.
So what that really means is someone buys a home, they like the kitchen, but they feel the bathrooms are a little outdated, or they want a new flooring, or the pool needs to be repaired, and the scope of work or the work that needs to be done totals less than $35,000. So what we call that is called a limited loan because it's less than a certain amount of a threshold that FHA puts on those loans. The next loan is called a Fannie Mae home style loan. So some people want to just use conventional financing, and Fannie Mae is conventional financing. So it mimics an FHA 203K, except for they're using conventional products. Now the down payment is a little bit more. On a regular primary residence, on a 1 unit, it's 5%. 2 unit primary residence would be 15%, and a 3 or 4 unit is 25%. You know, there are differences of why people would go with that versus 203K, and we're going to talk about that on the next slide. And here are your differences. With the 203K, the benefit is you're only putting 3.5% down, and it typically allows lower qualifying credit scores, which is helpful to the borrower. But with a Fannie Mae, the big benefit about a Fannie Mae home style loan is the loan limit is much higher. So versus a FHA loan limit of 460, you can go up to 643 on a conventional loan. So there's like the basic differences between those two products. So it really depends on the borrower, what they're looking to do, the price of the home, the scope of the work, and that's how we're going to be able to tell them which is the best product for them. Question so far? I see a question. No? No question? All right, everyone understand? Fantastic. The final one
is the VA renovation loan. So as long as they're a VA, which means they're a veteran of the United States military, they're eligible to do the VA limited or the VA standard. Similar to the 203K, they have different amounts of limits. So the limited is up to $35,000. The standard is over $35,000. Similar to the FHA and the Fannie Mae, same repairs.
The beauty about a VA is if you're a veteran or the spouse of a veteran, it's 100% financing. So there is no down payment required. It's a very popular loan amongst veterans today, and we are VA certified and specialists. So the beauty is now a vet could pick a house and not worry about the loan limits, not worry about any down payment whatsoever, and we could put them in the home, which is a very significant positive for those vets because they have the ability now to go in and really pick a price point that they're not worried about as long as they qualify with their income. Make sense?
Additionally, with the 0% down, all the costs of the repairs will be funded into the one closing. So if they find a $300,000 house and they want to do $50,000 of repairs, that's all still in the 0% down equation.
So we'd give them a new loan of $350,000, 0 down payment. We close on the loan. Then after the fact, they get to fix up the home. And the beauty is they had no down payment. And they're basically getting the house they want with no money out of their pockets. Questions?
How often can you use these programs?
Well, they're for primary residences. So let's say you're in a house, you fix it up, you stay there for a while, and then you want to sell it or rent it out eventually, then you could then do it again. But they're not for investment purposes. So it's not a fix and flip. You don't do it for like 90 days, 6 months. So normally a person who's buying the house, fixes up, stays in there for at least 12 months, and then says, you know what, I want to move to a bigger house, or I want to move to a condo, or I want to move, locations. And I really enjoyed it, so I want to do it again. So what happens is they go again and they do it another time. So where do you get the most of the money on the repairs or the fixing up of a property? Well, we all know kitchens bring enormous value when you're doing something to the house. When you fix up your kitchen and modernize it, that's the wow factor for people. When people drive up to the property, a perfectly manicured property, the landscaping is a big thing for them as well. So you have the ability of changing the complete landscape of a property. Bathrooms, very important. And you can even do the exterior of a home. I mean, if the HOA allows you to do it and you want to change from a stucco to a brick, you're allowed to do it. So those bring the most value. Things that are not seen that bring a lot of value that people can do in older homes, they can do the roofs. We all know roofs now are very expensive. So they might buy a house that's 40, 30, 50 years old. It might be the original roof, it might need to be repaired, it might need to be fixed, it might need to be replaced. Well, these programs are going to add a lot of value even though someone can't see it. They might have a pool there presently that they want to get it redone and modernized. Well, you're allowed to do that. That also brings value to it. So there are a lot of great values to doing this and using it to increase the value of that home that they're purchasing. Now, in today's market, it's really instrumental because, you know, these homes that are not fixed up trade a little bit lower than the other homes that are fixed up. So the beauty is, why not buy those homes, have some vision, and then fix it to the way you want it? Because if you're going into a house that someone already fixed, you might not like the bathroom, you might not like the kitchen, you might, even though it's fixed up, and then you got to pour more money into it. But so it's a very attractive situation in this market today to do that type of renovation loan. There are some risks that you have to consider when it's coming to doing this type of loan. You know, you got to make sure the long-term costs of this loan are going to be good for you, meaning that you're going to stay in the home because you're going to have a higher loan amount than the purchase price because it's going to be the loan amount after you fix it up. So what happens is you want to make sure, okay, I love this property, I'm going to make it my home, I'm going to stay in there. It's not a fix and flip situation because truly after you fix it up, it's going to get fair value, that it's not a flippable situation. The other risk is, you know, you want to make sure the people that you are hiring are trusted, licensed, and insured contractors. You want to make sure that when they do the work for you, they finish the work. The work is done to your, you know, liking, that you're happy with everything, and that there are no issues after. So we're going to talk about that as well. Loan Depot has set up a partnership with Lowe's Corporation on a national basis. And in this partnership, we've joined forces that if we do a renovation loan for them, a 203K, home style, or VA, as long as they hire Lowe's, Lowe's coordinates everything else. They'll hire the contractors. Then they'll make sure that they're FHA approved contractors, VA approved contractors, licensed, insured, and bonded. And they're going to be able to pick out the items you want with you and design your home together in Lowe's with a specialist. Now, what's important for me, why I really like this program, is we do not release money to Lowe's until it's completed and you're 100% satisfied. So you don't have to worry about you're hiring the least expensive contractor who might use subcontractors, not finish the work, you're holding back money. They put what we call a mechanic's lien on the property. That's when the contractor doesn't get paid in full and they slap a lien on the property after the fact. So by hiring Lowe's, it gives you that ability of a full 100% protection as a client, as a borrower, which is so important. And you want to make sure that someone's managing the job, that the job gets done. And you don't have to worry about any issues, and it's done to your 100% satisfaction. Questions so far on that?
The company name is Lowe's.
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 Our company is Loan Depot.
Loan Depot, and you partner with Lowe's.
Yep.
Yeah.
You gotta make sure that the deal is secure.
Right. So what happens is if someone wants to do a renovation loan, you know, the people have the ability to choose whoever they want. We're going to make the recommendation that they set up an appointment with a specified loan, specialized Lowe's specialist for renovation. They'll sit down with them. They'll do the schematics with them. The person's going to tell them what they want to do, such as bathrooms, kitchens, flooring. They'll design it with them. They'll hire all the contractors that they've approved, and they'll make sure the work is done to 100% completion.
Okay, understood.
So that's a really strong protection for the clients at that point. You know, you want to make sure everyone's satisfied, because if they're happy, they're going to come back to you and send you referrals. They're going to talk to their friends. They're going to talk to their family, and you're going to get more business from them. And they're going to show off the homes, which is instrumental, because that's going to expand your business. Questions?
Thank you.
Okay, so the next program we're going to talk about is called the Debt Service Coverage Ratio. program. What that is, that's a program that's designed specifically for investors. That's for people that want to buy investment properties. Now, we all know Fannie Mae says you could have maximum of 10 loans for properties, and then you're locked out, you can't get any more loans. On a debt service coverage ratio is not a Fannie Mae loan. This is completely a separate loan that is designed only for investors. Someone wants to buy a property as an investment property, we've designed this program that's similar to what's called commercial financing. So whatever the market rent is going to be on that property must cover the principal, interest, taxes, insurance, and even association on that property. So let's look at the numbers and talk about that for a second. So if you're buying a property for $200,000, $250,000, and you know the market rent in that area is $1,500 for a similar property. So when we do the mortgage numbers and so forth, we want to make sure whatever the cost is for principal, interest, taxes, and insurance is exactly the same as the rent. The rent could be higher, but the same or higher. And that's what we call a one-to-one ratio. Now, on this program, a borrower could put down as little as 15%. This is only on their credit score. We don't look at income. So this is what we call a non-qualifying income program. The investor never sends us their tax returns, doesn't send us their W-2s, doesn't send us anything but their bank statements, and we pull credit, and we order an appraisal, which does a CMA and tells us what the average market rent is, and that determines how much of a down payment is. Because if the rental of the property doesn't equate to the cost, they have to sometimes put down a little bit more. So I've seen them go from 15% to 20 to 25% down, depending on the property they're buying and the price of the property. Questions so far on that? Phenomenal program for investors. Why? Because they could do these loans under an LLC or a corporate name. They don't have to do it in their personal name, which gives them a lot of tax advantages. It protects their liability on a personal level as well for them, because now the property is owned under a corporate name, not personally, so if anything happens, they don't have to worry about their personal liability. A lot of investors I've ever dealt with in the past always ask the same question: could I put this in a corporate name? Well, we all know Fannie Mae says no, you can't. But with this program, yes, you can. Make sense? Questions? All right. The next program we want to talk about is called the ITIN program. It's a tax identification number. So there are people that have come to the United States that don't have their social security cards, their green cards yet. What they have is an ITIN number, and just an ITIN number. For many years, they were not able to get financing. They were locked out of financing. This program has been created so people with ITIN numbers can get financing. So if they have a 720 plus credit score, they only have to put down 10%. If they have a 700 credit score to 720, it's 20% down. All they need to do is provide us with their tax returns or W-2s. We got to qualify them on income because we got to see that they're paying taxes, which a lot of these ITIN individuals do pay taxes. And they must have 6 months reserves in the bank after they purchase. So it's a very open program right now where people were unable to purchase with ITIN. If I was a realtor today, I'd be like, I'm finding those people because they didn't have that ability before. Now this is opening up home ownership to those people that have to be in rent. And we all know the rental market is out of control. The cost of renting, you're better off buying at this point. So now these people have the ability to, create, the dream, owning a home. And they don't have to have their social security number yet. They don't have to have the green card. They have to have a valid passport and a government ID with their ITIN letter. And they're able to go in and purchase a home at this point, which is enormous. It gives people, the ability to really make roots in places and don't have to move from one apartment to another or another house to another. They get to stay and create roots. So we're looking to be able to expand home buyers, and these various programs, are, out there to help other people that can't compete in certain levels, that they can go out now and step into the marketplace. The first one, like we spoke about, is the renovation. So they don't have to go to a fixed up home. They can make it the dream home if they want, with very little down payment. Then we have for investors, the debt service ratio program. And now we have the ITIN program. There are various other programs which we have at Loan Depot. Give you an example, foreign national loans. We do those all day long as well. So all you have to do is call Floralba. She's available. Nate, who's available. They could help you. They could discuss the various programs. They could tell you where your clients fit. They'll really work with you and try to get the people in a home. And condos are eligible on all these products as well. So it does not have to be a single family residence. So if people want to get into condos, that's available too. Questions? Nate, Floralba, would you like to add anything?
Thank you very much for showing up today, and contact Nate or John or whoever at Loan Depot, and we'll take good care of you.
Thank you so much for coming, and we are here to help you anytime. Just call us. Thank you.
Thank you very much, everyone. Have a great day.
Thank you.
you.